So, okay. Now we have to do retained earnings. And what did we say in the first year? It's the parents in first year. So that's 85,000. Normally we'd pull it from a retained earnings calculation, but we didn't have to. Okay, and the last calculation was NCI on the balance sheet. So NCI on the balance sheet we calculate different ways, and it's 7,050. And where did we say NCI goes? It's with equity. So we have to put NCI on balance sheet as 750. So that's just going to go over to here. Okay, so that's all color coded so you know where to look. Now, we can do the consolidated statements. So, just to remind you, we add this to this, add these two columns, and then add or subtract if there's anything in the middle. And this is the direct method. So, I have 80,000 here. And remember, you guys, on Blackboard, there's an Excel spreadsheet with a solution. So I'm not going to, actually I'm going to do this whole one just to make sure you know what you're doing. But you can do it on Excel and yourself and make sure you get the right answer. Okay, cost of sales, 26,500, 14,700 plus 2 is 43,200. Miss expenses is 13,200. Patent amortization, 1,500, and 50 for goodwill impairment. And that should give us 22,050. Now the retained earnings statement. We know we start with the parent only in the first year. Then we take the net income, and you ignore both these net incomes, and you only take the parents that you calculated in 5 or 6 or on page 5. So you take the 21,300 and cancel this off, so it's just the parents' dividends. So 6,000. Remember to subtract them, and you should get 100, 300. Now, that goes to retained earnings. So the 100, 300 goes right to retained earnings. There. And now you just keep going. Miscellaneous assets, 156,400. Inventory, 30 plus 14 is 44. The investment. What we do with the investment, always get rid of it. So it is 0, always, because you can't have an investment in yourself. The patent is 10,500 and the goodwill 39,50. So we get total assets of 214,850 and liabilities 47,11 minus 1,000 is 57,500. Now, common shares. What did we do when we did a balance sheet in chapter 4? What did we do? The subs, common shares, and retained earnings. Nothing. Always ignore them. And in fact, look at this retained earnings either, because we already filled it in from the calculation. So, common shares are always just going to be the parents. And NCI is the total we gave. So that should equal Now, getting a balance sheet to balance is one way of showing you pretty much got most of it. But don't, if you're behind time, don't waste your time trying to make it balance. So that's the direct method. Notice I don't have equal debits and credits and all the way. If you look on the balance sheet, sorry, not balance, on Blackboard, on the Excel spreadsheet, you'll see the solution filled in with the entries, which we are going to talk about right now. On page, they start on page 6. Yes, page 6. One little comment. This looks really easy. I mean, not all the scribbles, I mean the adding everything together. Please make sure you've tried it at least once, because unfortunately, I see a lot of students over the years, or they've told me, they said, yeah, it just looked so easy, I didn't do it. And then when they come to an exam, they try and do this, but they can't remember what to do. Now, again, you guys have an open book, okay, which CPA is not, just so you're aware. So I highly suggest you treat this closed book exam. And if you can get through the exam and not use your book, or just maybe glance at it for one or two things, then you're prepared for the CPA. But having it open book, sometimes people just go, well, I'll just copy this format and do what it does here. But be careful, because formats change, and if you don't have it on your tongue, when you have to go fast, you can't get it done. Okay, so I'm just encouraging you to treat this final exam as if it's closed book. Okay, let us go to page 6. We're going to do the consolidation entries. And you only need entries to the end of chapter 4 for the exam. Okay, so this one is new, the first one. We're going to eliminate intercompany transactions. So here's the dividends of 2,000 and the notes payable and notes receivable. Okay? So we deal with NCI dividends with NCI later. So this is your first one. Eliminate intercompany transactions. Now, on page 7, we are going to establish beginning NCI to the investment. So that is not new. We've already done that. Then we're going to close the investment, subs retained earnings, and common shares from the beginning of the year. So this is where we cancel out the investment, and notice it's increased by this, and subs retained earnings, subs common shares, and the acquisition differential. So that's not new either. And notice it's from beginning of the year, beginning of year 5, not necessarily acquisition date. So here's another new one. You're going to record items from the changes in AD schedule, which is both the balances of assets, liabilities remaining, plus the increase or decrease to revenue expenses on the income statement. So we record the balance in goodwill, we record the balance in the patent, and we debit, increase the expense, and increase the expense. They're all debits. And then you total it up, and it should equal the acquisition differential, because what you've done is put all the beginning balances minus the changes, so everything is represented on here, okay? Same as at acquisition. So this is how our AD gets canceled out, those two. Now, we have to establish NCI from net income on the income statement and the balance sheet. So we're going to debit NCI income statement, credit NCI balance sheet for the $750. And that's also new. And then we're going to eliminate the dividends paid by sub to NCI. That's our piece that we were missing. So debit NCI balance sheet and credit dividend sub for the 500. So now all the subs dividends are canceled out. And this was new. So you can see how this gets just a little bit crazy. Okay? Okay, this is where we're going to leave it. So I suggest you go back, go through this example again, fill out the Excel spreadsheet using the direct method, or maybe putting in all these 6 elimination entries into the spreadsheet and see how it works out. We'll go on to year 6 in the next set of videos, and hopefully it'll make sense. Okay, see you in the next video.